My name is Eric de Montgolfier, and I'm the CEO of Invest Europe. First, allow me to thank AVCO for their invitation and providing me the opportunity to speak at their annual conference. When Rudolf Kinski suggested I focus on the impact of venture capital and private equity on Europe's economy, he knew we had the most authoritative source of data on European private equity, investment, divestments, fundraising statistics from our members since the 1980s, showing how our industry contributes to the European economy, as well as through superior return and well-documented financial contribution to pensioners and savers. What Rudolf didn't know was that Invest Europe has long known of the need to develop a data-led overview of private equity's social impact across Europe. We simply did not have the hard facts until today. I am pleased to inform you that in September, Invest Europe published a groundbreaking report entitled Private Equity at Work, presenting a transparent account of European private equity's record on employment and job creation for the first time. More on that later. Next slide, please. A quick word first on who we are and what we do. Invest Europe is the largest private equity association in the world, bringing together 650 members, GPs as well as LPs, with an enviable balance between our full members, 1/3 VC, 1/3 growth and buyouts, 1/3 LPs, and a well-represented PE ecosystem with over 100 associate members. With members located in 37 European countries, our association reflects the global nature of our industry. And Invest Europe is always close to issues of national concern, collaborating and coordinating with NVCAs, such as the AVCO, in the areas of public affairs and research. Next slide, please. In line with my introduction, slide 3, yes, here it comes. Slide 3 illustrates how PE and VC firms based in Austria and in the CE region contribute to your region's economy. In the last 5 years, 6.3 billion euros were raised by over 130 funds, with an increasing number of local and regional GPs successfully raising funds over the period. More significantly, 15.3 billion euros were invested in the last 5 years to back 1,700 portfolio companies located in the region, well above the amount raised by local and regional GPs. This signals the attractivity of the region and, in parallel, a potential for local and regional GPs to raise and invest larger funds. Next slide, please. Slide 4 demonstrates that there is, in addition, a lot of room to grow in your region when looking at investments expressed in percentage of GDP. Austria and most of CE countries, displayed here in orange, still have some way to go to reach the level of investments experienced in more mature economies. Another marker of growth and of further positive economic impact for the region going forward. The statistics presented on slides 3 and 4 highlight the economic impact of our industry, but do not give any indication of the social impact of PE and VC-backed companies across and outside the region. Let's look more closely at the findings summarized in Invest Europe's Private Equity at Work report, first on a European level, then at regional level. Next slide, please. What slide 5 shows is that private equity is deeply woven into the social and economic fabric of Europe, supporting employment in every country and every major industry sector. There were over 20,500 private equity-backed companies in 2018, 14,500 of which were SMEs, employing fewer than 250 staff. Private equity is a major employer, employing 10.5 million people in Europe in 2018, as many people as live in Greece or the Czech Republic, or go to work every day in the Netherlands. This represents 4.5% of Europe's total 236 million workforce. The industry also indirectly supports many jobs, at companies that supply, ship, or package and design the products for private equity-backed companies. So essentially, private equity supports high-value jobs and sustains employment, benefiting communities in the regions in which it is active. If we look at the type of investment firms, buyouts support nearly 7.5 jobs across Europe. Growth is the second largest segment, supporting over 2 million jobs. Venture capital-backed companies support over 400,000 jobs in Europe. Next slide, please. Slide 6. What do we see on this slide? Well, private equity is an engine for growth, and growth is an engine for job creation. Active management leads to successful businesses that grow more quickly and invest more in creating new jobs. Private equity-backed companies increased jobs by 5.5% in 2018, 5 times the European average of 1.1%. In all European regions, private equity created jobs at a higher rate than the local or European average. Invest Europe members created over a net 170,000 jobs in 2018, more than the working population of Bilbao, of Bonn, or the number of people passing through Amsterdam Central Station every day. By type of investment firm, buyout firms created the most jobs in the study, 105,000, and VC firms increased employment at the fastest rate, plus 16%. Last but not least, SMEs have created more than 18,000 jobs. And interestingly, Austria is one of the top 3 countries with the largest increase in employees within the SME universe at plus 27%, which is a good transition to look at slide 7. Next slide, please. Let's focus now 1 minute on the region's contribution to employment and job creation. What do we see? Somewhat contrasted figures between employment and job creation. In terms of employment, employees at PE and VC-backed companies represent only 1.1% of the region's workforce, a significantly lower proportion than the European average. But Austrian portfolio companies are the second largest employer in the region, after Polish companies. In terms of job creation, more than 13,000 new jobs have been created in 2018 versus 2017, a 9.8% growth rate above the European average. But Austria's growth rate at 3.1% is also lower than the top 2 contributors to job creation in the CE countries, as well as below the European average. Irrespective of their relative strength or weakness versus the European average in our industry, these figures clearly illustrate the social impact generated across your region. Last slide, please. In conclusion, if there is 1 or 2 takeaways that I would like the audience to carry with them from this presentation, it would be the following. The potential of private equity can be carried forward even during these most challenging times. People and businesses in Europe are struggling with the unprecedented impact of COVID-19, but the economic downturn will lead to job losses, and privately-backed companies are not immune. However, the industry is continuing to invest through the crisis to support businesses and the long-term investors whose money the industry manages. Companies that can emerge from this downturn stronger will be able to continue to create jobs, generate returns that support pensioners in retirement, and contribute to the European economic recovery. It is essential to secure our industry's license to operate while facing calls for further regulation. We will not win the hearts and minds of policymakers and of civil society at large with anecdotal evidence, but with hard facts and figures. PE will be key to kickstarting the recovery of the European economy and creating new jobs. Thank you for your attention, and I'll now leave the floor open to questions.
Now, Eric, I don't know whether you can hear me. This is Rudolf.
Yeah.
My question would be, what is Invest Europe now planning order to get the message across to particularly also politicians, the public at large, how do you spread the good news that you have just developed based on your analysis?
Well, we have many ways to do so. One of them, obviously, is in terms of communication to spread the message around. We do it through social media, through the PR release that we've done a couple of weeks ago. So we've had some media coverage to send the message across to a wider audience than the one that we used to reaching in the past. And we have a specific action developed towards EU policymakers with our public affairs teams meeting a number of stakeholders at the Commission, at the Parliament, to make sure that this new way to present our industry is shared.
Eric, I don't know whether I can be heard by anybody else. Maybe you can repeat my question. The other question I would have is, how does Europe compare to other regions like America and Asia? I mean, how much, this is good news, but how much of a catch-up do we still need in order to reach the impact of venture capital private equity, particularly in the US?
Actually, I had the discussion with our American and Canadian friends a couple of weeks ago, and I discovered two interesting topics. One is that in the US, they haven't compiled this kind of data in a way which is as consistent as ours in terms of methodology. So we don't have comparables with the US. And the Canadian Venture Capital and Private Equity Association will release in the next couple of weeks their own figures. So it's early days to do that effort of producing the data, and early days as well to be in a position to compare the job creation and the employment that is present in these regions, basically.
Okay, I don't think there are any questions. Are there any questions? Now, you can still be free to say a few more words. We have 6 more minutes, but you don't have to take them all.
Okay, well, thank you very much. I'm afraid for technical reason I was unable to hear the contributions of your first speakers, but I will catch up for sure when I will be able to connect to your recordings. Well, what else can I say on that? I think two important developments going forward. The first is that today we have focused on job creation and employment, which are important points to communicate to our stakeholders. But tomorrow we'll have to do more. One, we'll have to extend that study that we made for our members to the wider, I would say, the wider number of private equity and venture capital funds. We have today answers from 300 members of Invest Europe. We should increase the collection of data to more than 1,000 funds across Europe. And we're in the process of doing so. We've launched that process of collection of data in June, and we have today a very good response rate. So we hope to be in the position in the coming month to communicate the 2019 figures, which are the last set of data we'll be able to produce before the COVID-19 crisis struck. So expect more from us on this front. But it's not enough. We will need, in the coming years, to increase the level of social and economic impact data that we need to produce, so to collect, and then produce, and then communicate to our wider environment. For a very simple reason, ESG will be more and more prevalent in the coming years. We'll have also to demonstrate that we're growing revenues, that we are growing CapEx, that also we may grow also at a quicker rate than other companies' patents. So there are numerous ways to explain to our environment how we contribute to the society at large in Europe and to the economy. And today, the effort that we're putting on is really to increase this number of data that we can collect, which requires an effort, a big effort from our members and from other practitioners across Europe. But I think that it's extremely important to get there to change the narrative around our industry.
Well, Eric, I think that those are all good prospects. I think that we, as an industry, need to show to the public, provide them with a better understanding of what our contribution, but particularly the politicians, that we have an important role to play in the economy, that the impact that we have on the economy, on innovation, on growth, is not to be underestimated, not just because we provide financing, but also because we are developing companies, helping them, in fact, to have forward-looking strategies that are based on growth and competitiveness. And I think your figures on the social impact is very important. I think jobs are key in the thinking of politicians. That's what they think first of all when discussing the economy. But also then, the innovation, the R&D, the IP that we are developing with our portfolio companies. I think these are all very important aspects of what our industry can provide, and we need to just yell it from the rooftops. and thank you very much. Thank you very much for helping us to do that, also in our region. So thank you for joining us, Eric.
Thank you, Rudolf.
And all the best, and we're looking forward to further basis on which we can make our arguments heard in the coming months and years.
You will definitely hear from us. Thank you very much for your invitation.
Thank you.
Bye-bye.